Here is your market update for the Winnipeg market in 11 different neighborhoods, focusing on the price change from last year to this year so far. I'm going to look at the median sale price in all those and the change it's had to let you know which markets are really popping off and which ones are maybe cooling down and there's some opportunity for you to buy. On the flip side, if you're selling and you're in one of these markets that are really popping off, it might be worth it to get a free home evaluation to see how much your house is worth. Okay, welcome back. My name is Cody and I'm a realtor here in Winnipeg. And like I said, today we're having a market update for May of 2025, looking at what last year was like compared to this year. And I will say every neighborhood is up from last year. And so if you're expecting some to have depreciated, that's not gonna happen. But there is a couple neighborhoods that have been performing a little bit worse and some that have been performing a little bit better. We're gonna talk about which are which and why I think some of those neighborhoods are doing significantly better than others. So let's get into it. So 3 of the lower performing neighborhoods might shock you, but they're actually Sage Creek, which is a lot of new construction, which we'll get into, Crescentwood, and Norwood. Now, the crazy part is both Crescentwood and Norwood are 2 neighborhoods that have been historically very much in high demand. But recently, there's been a bit of a shift and they haven't appreciated as well. And we'll talk about that. But let's get into the numbers. So Crescentwood, the 2024 median sale price was $365,000. In 2025, it's $383,000, giving an increase of about 4.93. So yes, that actually is a 5% increase, which is actually pretty good. But for our numbers, it's not that great, which is any indication of how it's going to be. Norwood was $372,000 in 2024 and $380,000 in 2025, giving an increase of just 2%, which is the lowest number that we have on the list today. Sage Creek, last year's sale price $630,000, this year's $648,000, giving a 2.86% increase. Okay, some of those numbers I rounded, some of them I gave the exact one because it's whatever rolled off the tongue and that was easier. For Sage Creek, it's not a surprise that new construction is a little bit down, and we'll talk about how that's affected some areas more than others. But as Sage Creek continues to expand outwards, these newer homes that are not in the core of Sage Creek aren't quite as desirable, and with the higher price tag, people are starting to go after more resale homes as they become more available in more central areas of Winnipeg, like Lindenwoods, which we'll talk about in a minute. Okay, and your 3 sort of mid-tier neighborhoods are Lindenwoods, the West End, and South St. Vital. And I kind of grouped all of South St. Vital into one area. Now it does have obviously different areas as well, same with the West End, but for this video, we're grouping them together. So Lindenwoods, last year's sale price was $650,000. This year's is at $690,000, giving a 6.2% increase. The West End, last year was $250,000, and this year's at $268,000, a 7.2% increase. And South St. Vital is $433,000 for last year, and for this year, $460,000. So that's a big jump, which is 6.24%. So that's a pretty significant jump for all 3 of these markets, considering the Winnipeg average is around 6%. These have all outperformed that. Now, maybe the most worrisome is that the West End, which is historically not a super well appreciating market, has gone up by 7.2% from last year, which to me means it's outperforming its historical average, which means some people are probably overpaying. And that's most likely due to the fact that there's such a low inventory of starter homes. If you're looking at homes under $300,000, this is one of the only affordable neighborhoods where you can find that. Now, on the other hand, I do think it's good for the West End that they have a bit of an uptick, because it's gonna help with some rejuvenation in that area because of more people moving in that have stable income, better paying jobs, that can afford homes and are paying more for those homes. In areas like Lindenwoods, even though it's only a 6.2% increase, that's $40,000 on the average house. And I have clients who are looking at Lindenwoods. It is a slaughter out there. There's not a lot of homes available. The ones that are coming up are often getting over $100,000 over ask price. Okay, moving on into our 3 high performing ones, and stick around because there's 2 more that are super high performing. These 3 are River Heights, Transcona, and Bridgewater. Now, Bridgewater includes Bridgewater Trails, Forest, and Lakes. In River Heights, the average price went from $494,000 last year to $540,000 this year, which is a 9.3% increase, which is crazy that River Heights has the median sale price at $540,000. That used to be a first-time home buyers market. It is now no longer that case. Transcona, which has become one of the newer first-time home buyers market, went from 350,000 to 380,000 this year, which is an 8.57% increase. And Bridgewater went from 605,000 to 657,000. Now, again, that's not too much of a shock. Some of those homes have a little bit more to them. They're not new, but they're maybe 5 to 10 years old. And so those homes have appreciated. They're starting to see some appreciation for the fact that the city has expanded outwards and some of those neighborhoods have become a little bit more central to the south end. Transcona has jumped up a bunch because a lot of people don't want to be in the core of Winnipeg and they're moving out there because those homes are only 40 to 50 years old and they're decently sized first-time home buyer homes. Like I said, with the West End going up a ton in value, so has Transcona. And if you're noticing something, a lot of these first-time home buyer markets have shot up, okay? The River Heights one, like I said before, is very concerning that has jumped up so much. That's almost 10% year over year so far. And that used to be a first-time home buyers market. People used to buy homes in the $300,000 to $400,000 range. Now it seems like you have to almost be in the 500s to afford anything. And even that is gonna be an old home that's probably gonna have deferred maintenance, small backyards. I don't love the fact that you would be jumping into that neighborhood unless you love it or you find a solid house. But to pay that much for River Heights, I think there is better options. Don't hate me for that. Our top 2 markets in Winnipeg from last year to this year is, drumroll, Wolseley and Fort Garry. Now, this will come as a surprise to a lot of people because Wolseley has a very similar demographic to River Heights. And like I said, River Heights is maybe concerning it's jumped up that much, but Wolseley, the average price from last year was $382,000 to $435,000, a whopping $50,000 increase, which is up 13.73%, which is incredible because that is an old neighborhood. I think what we're noticing is a lot of people are starting to crave community a lot more. After COVID, people have been hunkered down. These homes that are in these good areas are in such high demand that prices are just skyrocketing. And that's very similar to Fort Garry, one of the most central neighborhoods in the south, one of the safest, and in East Fort Garry specifically, one of the best appreciating neighborhoods. And East Fort Garry, or not East Fort Garry, but Fort Garry whole jumps from $395,000 last year to $460,000 this year. That's a $65,000 increase, which is a whopping 16.46%, over 10% higher than the Winnipeg average over the last 20 years, which is incredible. If you live there, if you don't, it's very hard to get into that neighborhood, and this is why. That neighborhood is very fast becoming unaffordable, and there's not a lot of turnover, and inventory is very low. And so I will say with all these numbers, you do have to take it with a bit of a grain of salt because we're only 5 out of the 12 months through the year, and so some of these numbers will fluctuate as more and more homes come available. We're only looking at about a third to maybe 40% of the homes sold so far this year as compared to last year. So it is a smaller sample size, but later on in the year, we'll give another update that will be closer to a full year and we can compare it to how it looked in May to down the road. Now, let's get into why this is happening. Why is Winnipeg appreciating so much while other markets in Canada seem to be struggling? Well, we've hinted at this throughout the video, but Winnipeg has such a big supply issue going on, and with not a lot of inventory that's affordable, that people are overbidding because there's 12 buyers for every 2 homes that come up. And so because demand is so much higher, every home that isn't decrepit or falling over is in very high demand. Because that's the other issue too. If about 25% of the homes that hit the market aren't really sellable or livable homes, that also decreases the supply even more. Or sometimes people have to buy that, but most people don't want to seem to be doing work, especially with the upcoming generation and the large immigrant pool who aren't really familiar with how to do trades here in Canada. The other thing dramatically impacting the market that I don't think a lot of people really realize is that most of these home buyers are couples who have dual income. Sometimes they have no kids, and this is part to people being more educated than they have been before and having kids significantly later than they used to. So people have access to more funds from living together and pooling money together than they used to back 20, 30 years ago. The millennials sort of started this, but the upcoming generation has sort of embraced this as well. And so because of this, that first time home buyer market is a lot of people that are approved for 350, 400. If they're two college graduates, they're probably in that low $600,000 range, which is where we're seeing a lot of these markets sort of cap out at, aside from Lindenwoods and other markets. And that's where people are being very competitive because they are shopping actually below what they are approved at and getting the house they want because there's not a lot of options. And so that's this market update for this year. If you are interested in understanding what your neighborhood has appreciated at, or if you're interested in buying in one of these spots and want to know where can you find a good deal, what's the best market for long-term appreciation, let's chat about it. Reach out to me. I'm happy to set up a call, or you can attend one of my webinars to go over something in more detail. But that's all for today. Thanks for watching. I'll see you in the next one.